Ladies and gentlemen, good day to you anywhere you're listening. I'm Yemi Olaleye. I'm a global market analyst, and this is another week to explore the markets. Looking at the global market for this week, we have the opportunity to see few details from the fundamental outlook of the market. With the global tension going on between China, between USA, and other countries around the globe, between the treasury bills that are being dumped, between the high interest rate, high inflation across the countries, it is necessary for every trader to understand what's going on from the fundamental part of the business before we hit the technical zone. For the week ahead of us, there are so many opportunities to make some buck in the market. And starting from the 21st of April till 25th of April 2025, let's look at what we have in the market from the fundamental outlook. Join with me on theforexfactory.com, looking and focusing on the high impact news only. For the Monday, 21st of April, we still have holiday going on, which is the Easter Monday, and all banks are still on holiday, including for the CHF, Euro, and Great Britain pounds coming up. So bank holiday is still very much going. As you witnessed on last week Friday, the market has very been sluggish, and that's justifiable because that was a good Friday. So the holiday continues till Monday, 21st of April. We are not expecting much activity and volatility in the market on this day. So you have to be careful. On Tuesday, there is no high impact news in the market that we can see from this point of view. But on Wednesday, we have high impact news coming up on Euro, 8:15 a.m. Nigerian time, which is the French flash services PMI. Another one coming up 8:30 a.m. Nigerian time, which is the German flash manufacturing PMI. These are high impact news. They're going to impact the market. If you trade EURUSD or any other euro pair, you have to be careful because this may tend to be a little bit volatile. The forecast has set to be 47.9, and we expect the actual to drop before we know what to do in the market. 9:30 a.m. Nigerian time on the same Wednesday, 23rd of April. Another news is coming up for the flash manufacturing PMI for Great Britain pounds, which is very, very okay because this basically it cut across the Eurozone. And looking at the 2:45 p.m. Nigerian time, we have the US dollar news coming up on the same flash services PMI. So basically 23rd of April, which was the Wednesday of this week, we would be expecting much of PMI updates from these currencies, Euro, Great Britain pounds, and US dollar. So you have to be careful, and they are all high impact news. On Thursday, 24th of April, we have two. Just particularly, we have three news coming up, but one high impact news. Basically, that is for the 1:30 p.m. Nigerian time, which is the unemployment claims for the US dollar. And that has a lot to do because the previous we had was 215K, and we're going to wait to see the forecast, and then the actual will determine what we'll do in the market for this particular day. And on that same day, NZD and AUD is having the bank holiday. So that might be a very slow day at the office if you trade NZD and AUD pair. So you have to watch it. And on Friday, of course, 25th of April, we focus on the high impact news coming up on Great Britain pounds, 7 a.m. Nigerian time, which is the retail sales. These basically have to impact the market. The forecast has been 0.4%, and we're expecting the actual. And that has a lot to do with what we decide for the week. Canadian news is coming up 1:30 p.m. Nigerian time on core retail sales. Now, on Friday, we should be expecting this high impact news on the Great Britain pounds retail sales and Canadian dollar retail sales to be really impactful. So if you trade Great Britain pounds and Canadian dollar together, which is the GBPUSD, you have to watch it because that may be a whipsaw effect on that same day. So that is the outcome or outlook on the fundamental part of the business. Let's go straight into the technical part. We'll be checking few currency pairs today. I'll be doing a top-down analysis from the monthly time frame to 4-hour time frame so that can suit every form of investor, from the long-term or position investors to the daily scalpers and the swing traders, so to say. So the scalpers may not really have so much to find here, but for intraday traders, they will find a lot to do with this outlook. So I'm going to run it from monthly to weekly, daily, and I will stop on 4 hours. Yes, most importantly. On the monthly time frame, we've seen the DXY, just like my last outlook on it. It remains very strong in the bearish direction. And last week, I was still anticipating more bearish movement. So this is happening. For the past 3 months, DXY has been on the sell momentum, and this month has done more sell so far. This has done about 5,145 points. And let's go to the weekly time frame to see how we can use this coordinate for our other pairs in the market. Now, looking at this so far so well, we've left the market to run, and the previous low level at this price range, which was at 199.54, has been taken out in the market. And something that is very clear right here is that we saw how the market took out the previous low level with strong bearish momentum. Though last week was a very weak one for the market because the market ranged a little, but then ended as a bearish candle, but with a very short momentum. So that interprets that we can look forward to a price level like this, where we have the bearish fair value gap zone, which liquidity might be found, and expecting the market to move straight into that range in the nearest future before we see more bearish momentum on DXY. Because what we had on the higher time frame shows more of bearish momentum on DXY. Then what we should be expecting and focusing on the lower time frame is what the higher time frame has talked about. So basically, this is what I'll be looking for, expecting a little bit of sell, a little bit of buy into this range before I sell more. But the way the market is looking, it looks just like it will continue selling. So if that should be the case, then I would be expecting the market to do a bit of that sell to this price level for this week, all right, at 97.54. So this is what I'll be expecting for this week, but then the market might just come down straight. What I'll be expecting is I will wait. This will be a better place for me to buy, because as a seller in the market, you have to sell at a premium price. If you're a buyer, you have to buy from a discounted price. So if you want to sell this, I will advise and suggest to sell at 100.83, because that looks more beautiful for you to sell up from. But then there is all tendency for the market to continue with this bearish momentum right here without looking back. And if that should be the case, we are not arguing with the market. We just want to flow with the flow of that market. Okay. So that is based on the weekly outlook. And let's check what we have on the daily. Let's see if we have a chance to see more opportunity in that market. So for last week, we had a few movements in the market. It was a ranging day for the market. And when you look at the entire zone right here, when you look at what the structure is playing out, it seems like this cycle has been completed and market has broken below it. And when you see something like this, it tells us more about what we should be expecting. Market broke through that structure at a point in time. And when you look at this very carefully, you will see that on the Tuesday of last week, the market went back there to test it. After testing it, the market swept down immediately. So when market swept down a place like this, it is very normal for us to expect a continuation in that direction. So basically, I will still be expecting more sell momentum on this particular DXY right here. So for this weekly daily time frame, I will be expecting the market to do a bit of buy here, because this will reduce my risk on the lower time frame. Okay, a little bit of movement back here to break this high, but if it's not closing above it, I'm expecting more sell from there. This will be my daily outlook on DXY. If you are watching this, you have to do your own research and look out for where the possibility to engage comes in. But this is where I'm looking at personally. All right. So looking at that perspective on the 4-hour time frame, let's see if we have something more better. On the 4-hour time frame, we have something like this. The market has been ranging for quite some times now. All of this price range to this price level, the market has been ranging. So what do we do? When there's no opportunity in the market, you don't have to jump in the market, because that is your end money. So don't blow it off. Just wait for the market to give you a signal or confirmation before you really engage. And that's what will differentiate you from those that are gambling in the market. So all of this insight is to teach you how to analyze the market, how to look for opportunities, and how to engage, which is your entry. At the same time, how to apply your risk management, which is very, very useful. Okay, so what I'm seeing on 4-hour time frame right here is just the same thing I've said on the daily time frame. However, if this is going to be a buy movement, yes, we will be expecting a buy to come to a range like this. At a point in time, we're expecting it to do something like this in the market. So basically, I'm still expecting more bearish momentum here, though bearish momentum is reducing, but we can't decide that the market is ready to buy until it shows us a buy momentum. So based on everything we've seen in the market, this is still showing more bearish momentum. All right, that is that on the DXY. So let's go for the EURUSD and let's see what we have for the week. EURUSD dollar did a bit of good movement for last week as analyzed. At first, it did about 116 pips to the downside and 120 something pips to the upside for the week. And that went exactly as I analyzed that last week. So let's focus on what we have for this week and let's see what the market has for everybody. If you're just watching this for the first time, it's a very good time for you to look at the market from this perspective. All right, starting from the monthly time frame, I look at this market here. This month has been a very fantastic bullish month for Euro US dollar, which has done about 676 pips to the upside. And then this is the level I'm expecting for the price to violate, which the market has not gotten there, and that is 1.1489. So I would be expecting the market to still move above this price level before we have much discussion. So basically for me, this still remains a bullish momentum on Euro US dollar monthly time frame. Going to the weekly time frame, so let me take out this. I think these are what I did for last week, so I don't want to repeat, but at the same time, it remains the same. So all of the buys that happened last week are analyzed and expected it. So basically, for this, I may be expecting a little bit of sell for this week because we have a bullish fair value gap zone below this price level where liquidity might just be trapped. And for that reason, I would be expecting to see a little bit of selling to this range before more bullish momentum. At least we have a high level here, we have another high level here, we have another high level here. So all of these zones, they really matters in the market. I will be expecting the market to react with them. So in the meantime, we can expect a little bit of sell, which may do about, let me see, about how many pips in total. It may be doing about this 200 pips sell. This is quite much, and this is really, really much on the weekly time frame. But then I may not expect this to happen for this week. But let's go to a lower time frame to see the possibility of when this might happen. We might have an idea. This week we have news coming up, and then the volatility of those news will determine how far the market will really move, and that has a lot to do with our expectation. So basically for last week, the full last week was much of a ranging market, a little bit of buy though, but the market has not gotten to the price level we're expecting. So if you have to go by that, that means at this price level here, there is a momentum that we should be expecting because liquidity is here. Right here, we look at the market from this perspective. The market has not tested yet. So this level remains unmitigated in the market. And we can look at this from this perspective. Okay. So looking at this, let me shrink the chart a little bit so it can be more clearer. Look at this. So far, so well, true being told, the market has been bullish, but in a ranging way. The market has been bullish all along, but in a ranging way. So when you have something like this in the market, it tells you that you should be following the market with caution. And ideally, to even trade US dollar pairs right now, it's a bit risky based on the fundamental going on every single day. So a statement from President Donald Trump alone can actually change the entire direction in the market, but expecting what we've seen on the technical to play out based on what we'll be seeing on the fundamental. So fundamental remains a catalyst for the technical outlook and movement in the market. So what I'm looking at right here is still more bullish momentum because we still have zones here, we have zone here, we have zone here. So I will just be expecting that bullish momentum to continue until DSY says otherwise. So ideally on this daily time frame, the market looks so much that it has bought, but then let's look at it from this perspective. The momentum for the bullish run is reducing every single time. So what would this be? Will it be that the market will have to come lower price range like this before we see more bullish opportunity in the market, something like this? So if that should be the case, then let's go to a lower time frame to figure that out. So this is a daily time frame. So let's go to the 4-hour time frame. I'm trying to go to 4-hour time frame and let's find out. At the 4-hour time frame here, looking at the market, you see we have so much ranging. There's no really much engagement right here. There's no really much engagement. From here to here, we have a swing failure, and the market has been ranging ever since then. Okay, and with this outlook alone, we could be expecting a sell, but to what level, to what extent? Could it be that the market will find its way ranging back into this level of 1.3016 and or 1.3015 and expect the market to move into this price range before we have more sell momentum? Ideally, we wait for, I personally will wait for Monday to pass and wait for the daily candlestick to further confirm some of this movement in the market. Though looking at the perspective, this buy has been massive before this range. Trust me, that doesn't necessarily mean the market will start selling from here. All right, the market may just be looking for an angle or a price level where it could be looking for a buy opportunity. When the price is ranging like this, the only thing the market makers are doing is they are building up contracts. So that is why this is called accumulation phase. So when the market is in accumulation phase like this, you're only expecting to play safe and wait for the market makers to decide before you move ahead. So you don't go head to head with the market makers. Definitely nobody will survive. All right, this is the outlook on the 4-hour time frame on Euro US dollar. I would be expecting this to be a bit of buy for this week because DSY is portraying this will be another week for a buy. All right, so let's go to the Great Britain pounds US dollar time frame and let's see what we have there. On the monthly time frame for Great Britain pounds USD, this has also remained a bullish momentum for the past 3 months. And then At this price level of 1.3437, I've expected the price to get there before the price will actually violate or react, okay? But the price is still very much ongoing right now, and we can see the last price we have for the closing of last week market was 1.32909, and for this week, this remains a very bullish momentum. I'll be expecting more bullish momentum in this market for this month. So basically, this remains bullish for me on the monthly time frame, but let's go to the weekly and see further information. So I'm going to take this out, and looking at the weekly time frame, therefore, look at this. So over the time, we've seen how the market has completed different cycles, and GBP pounds US dollar is not different, is not exceptional. So looking at this from this perspective, this is actually heading to a supply zone. But of course, this remains a solid bullish momentum for last week, rather than what we saw on Euro US dollar. GBP pounds US dollar really moved well last week, and this did about 200 pips on average, and this was a very great bullish momentum. So with this outlook, therefore, this leaves us with one opportunity in the market to see that we should be expecting more buy in the market till this price. So I would be expecting more buy on the market for this particular currency pair, GBP pounds USD, till it gets to this price level. So this keeps me safe, and I don't have to jump on every trade I see in the market, because now I have a roadmap for the week. So let's go to the daily time frame and see what opportunity we have. Last week was bullish for GBP pounds US dollar, even though it was ranging at a point in time. And when we look at where we can be seeing opportunity for a rebuy at a point in time, I'll be places like this. We can have a place like this. We can have a place like this. Okay, this is a bullish fair value gap zone here. Of course, every other price level within this range has been tapped into and mitigated. So this is a balanced price range. From this price range to this price range is actually balanced. So I will just leave this level. I will leave this and continue with the discussion. So ideally, with what we've had so far so well, we have so many other lower price levels where the price may be coming to in the future. But one thing that is certain is this market actually pulled out for liquidity at the price level, and it started moving. Looking at the formation right here, the pattern also suggests that this should be a cycle, and we could be expecting more momentum in the market till it gets to a supply zone, and that supply zone would be this price level. So ideally for me, I'm still believing that this market is still more of a bullish momentum, which still have about 110 pips to the upside. And when the market gets into this price level, then I can be taking caution on if I should exit or wait for more reaction before I jump in for a sell. But ideally, this still looks a little bit bullish in the market, even though the momentum is reducing, but it's part of the game. So we have to follow the game, and we have to remain in the game so we are not liquidated. So ideally, this is on 4-hour time frame. We have a very massive swing to the upside on 4-hour time frame, a little bit of retracement, which is less than 23% on Fibonacci levels, and then boom, exclusive market again, and is breaking the previous high level right here, almost at that price range. So what will I be doing if I'm going to trade this? Then I have to reanalyze this. I have to check it from perspective of what I'm looking at right now, and that would be looking at the market. This has created a lower wick all through this level, right? And when you see something like this, it's just more or less a trend line liquidity. Okay, so it is easier for us to wait for the market to do a bit of retracement and get here before moving back in there. So right here, I'll be expecting the market to do a bit of retracement into a price range like this. It's from 1.3229 to 1.3204. But ideally, I do look for the average, which is a threshold of this price range at about 1.3215. This is what I'm expecting the market to retrace into before I'll get into a buy if I'm an intraday trader. So look at the market from that perspective, so you can you can remain conservative in the market. So let's go to the next one. Let's see what we have on. I don't know why we saw USDCAD. The last time we entered this guy, we made something from there. Okay, looking at the market from this perspective right here. So I'm going to take out everything, sorry. So from the monthly time frame, therefore, looking at this, for the past 3 months, it's been a bearish momentum, no doubt. So this level has been taken out. Market closed below it, above it. It came down again and closed below it right here. That was February, March, April. So this April market has been bearish so far, and it has done about 500 pips on USDCAD. So this remains bearish for us on monthly time frame. On the weekly, what we see is very simple. This looks a very good, it looks like a very good formation where you can see the entire swing happening this way, and what happened next happening this way. So what is remaining? This price level to this price level, expecting reaction. Market is that simple if you can see from that direction. But then ideally, the most important thing is where should we take opportunities in the market? Looking at that perspective, from this candlestick to this candlestick, right here, we can see a very fair value gap zone where volatility will just be residing, which means expecting the market to get into this price range and move down to this price range before we see reaction is just something that looks of high probability in the market right now. So looking at this perspective so far, we can see I'll expect the market to move to 1.400 psychological zone, where the market is just about 153 pips to the current price level before we can see more sell momentum in this market. But ideally, this remains a bearish market on weekly time frame. Let's go to the daily and see more opportunity there. On the daily time frame, therefore, looking at this perspective, on Monday, Tuesday, Wednesday, we have a bit of ranging and a slow day at the office for the last 2 trading days of the week. That was last week. And then looking at that, I have nothing to do with what we expected for this week, because this still remains bearish in the market. Of course, we can be looking at this level if we are dealing with daily time frame. Can be looking at this level where the market is sitting right now. So this will determine a lot about what you will do this week. So one thing is, you will either be waiting for the market to close below here, retest it, and continue selling. Most likely, this is what we should be expecting. Or we wait for the market to actually move back into this price range before it comes back to break here and continue selling. These are the two options that we have. But then, as I tell you every time, I'm not a kind of trader analyst that tells you if the market doesn't buy, it's going to sell. No, regardless, we should have a bias, because that will be what we've understood in the market so far. So from here to here is a price range level, which is a swing failure. From here to here, the lower low level. And we can see the market has broken out of that. So this looks bearish. Ideally, this looks very bearish in the market. So I will only be waiting for the market to break this level in the nearest days. If this is not too clear enough, we can wait for the first trading of the day and see how the daily candlestick will close before we decide. But I still much see more sell momentum in this market overall. So basically, if this is going to do a bit of buy based on weekly time frame, if you're a position trader, then we can wait for a sell at 1.400 psychological zone. Otherwise, I would be maintaining a sell bias on daily time frame on USDCAD. Going to the 4-hour time frame to be more precise, let's see what we can do from that range. So right here, the market has been doing equal lows and higher highs is about to begin. And when we see something like this, is a clear formation that we should be expecting market reaction in a dimension. So if that should be the case, maybe the market is just showing off that this is a time for us to buy. And looking at that perspective, we show something very clearly. I'm coming. Looking at this, look at this price range right here. It was too sharp. And this is more of a liquidity, right? A trend line liquidity. Price breaking above it now, showing all of this week up. Then it's telling us that the market may likely just pull in for a buy into this price range of the weekly time zone, and from there we have the sell. So basically, this is what I'll be looking out for on USDCAD 4-hour time frame, and this is the guide for the week, and I will hold on to this. Of course, we have holiday coming up on Monday, so we have to be careful. But then, if you have to wait for the daily candlestick closure on Monday, then that is fantastic. All right. So trade caution with your stop loss in place, with your take profit in place, and gather yourself together. So let's check out the last one we have. I think that should be gold. Do I have it here? Okay, gold is here. So over the decades, we've been looking at gold from different perspectives. That gold has always been doing this and doing that. At a point in time, gold was 35 ounce per dollar, right? 35 ounce for $1, so to say, yes. But currently now, look at this. 1 ounce of gold now is about 3,000 plus in dollars. So basically, we can say gold is really a safe haven, because every time we have this bullish momentum on gold, we should understand why. The only reason we have more bullish pressure on gold is because of the war going on in the global range right now. So when a country and another great country is having a dispute, diplomatic war, tariff war, whatsoever war is going on, everybody want to think to pull out. Every investor likes to pull out their money from such economy so that they are not crashed or they are not liquidated for no reason. So when they pull out their money, they're not going to keep it under their bed. What they do is they put it on gold and on other safe havens like JPY2. So basically, gold has received such massive investors over the months, and this has kept gold to be a very strong bullish asset right now. So last week, I analyzed that gold was going to take out the all-time high of its own price, and it did so. And last week, it created another all-time high of 3,356.92 in the market. So basically, let's go to the monthly time frame and do a little bit of that expectation for the week. ideally, I'll be expecting more bullish momentum on gold for now until everything going on as global tension in economies melts down a little. So currently, on monthly time frame, I still remain bullish on gold, and we can still be expecting to break its own high this week. But for the weekly time frame, we saw a little bit of rejection for the closure of last week candle, but that doesn't mean the market is ready to sell, of course. But if that should be the case, we have a level where the market will be coming if it's going to sell, and that would be about how many pips in total? Let's check it together. That would be about 1,000 plus pips, right? And I'm not thinking gold is ready to do that. I'm not thinking so, because the war is still going on. A lot of investors are still putting money, investing money in gold. So let's go to the daily time frame and see what we can look for more clearer in the market. So Monday, Tuesday, Wednesday, Thursday, Friday for last week was not really a great day for gold until Thursday. So Thursday was really a massive one, which it ended with a bullish Marubozu candle, and then it left us with a week. And we can look at the market from a different perspective now, whereby we have a fair value gap zone, which is the bullish fair value gap zone, from a price range of 3,284 to a price range of 3,242. And with that, I look for the threshold every single time. Don't forget, threshold is the average of those ranges, and that would be 3,263.29. So I can't be waiting for the market to come into that price range. And what I do basically is to wait for more sell opportunity in this market. And as you can see, this look above the previous high level. So on the other hand, on the higher time frame perspective, I'll be expecting more bullish momentum on gold, but this looks a little bearish. So let's explore together. Let's see where this might get to. On the 4-hour time frame on gold, we have this level on the daily, whereby this suggests to us that we should be expecting a bit of sell. But let's check it now. On the 4-hour time frame, gold has actually rejected a price level like this long week, and it closed with a bullish candle for the trading week of last trading week. So what can we be expecting for this week? A bit of rejection from this price level. Well, let's see. This actually did a bit of lower highs in the market, and with this candle, we had a sweep down to this price range. So this is not really too clear, but we can expect the market to react in a bearish direction. But overall, we're expecting more bullish